When the stock market crashes, most people panic. But the smart investors, they go shopping around. And that's because market crashes don't destroy value, they just temporarily misprice it. Great companies get sold off with everything else, and that's where long-term opportunity lives. In this video, I want to walk you through some stocks that I would like to buy if the market tanked tomorrow. Each of these companies has a durable business model, a strong financial foundation, and a history of weathering economic storms. These are companies that you don't just buy for the bounce, but you hold them through the recovery and beyond. So let's start with the first one. T. Rowe Price, ticker symbol TRO, is an asset manager with a rock-solid balance sheet and a long history of rewarding shareholders. While other firms rely on leverage or debt, T. Rowe has no long-term debt in its books. And that's a huge deal in a crash scenario. When interest rates are high or markets are volatile, companies with clean balance sheets actually survive. Even better, T. Rowe is a dividend aristocrat, meaning it's raised its dividend for over 25 consecutive years. And that includes during the dot-com bubble, the 2008 financial crisis, and the COVID crash. You don't raise dividends during crashes unless you have serious cash flow discipline. Now, what I love about T. Rowe is that it naturally becomes undervalued when markets fall. That's because their revenues are tied to assets under management. But that also means that when markets recover, their earnings bounce back up with them. So it's a pure play on the rebound with consistent income stream as well while you wait. Now, before we move on, let me ask you something. If the market dropped 30% tomorrow, and who knows, maybe by the time you're watching this, it actually does, what's the first stock you'd buy? Leave your answer in the comments because I'm genuinely curious what your crash playlist looks like. And if you're the type of investor who sees a sea of red and thinks, finally, everything's on sale, smash the like button so this video gets shown to more people just like us. Because, yeah, we need to get these videos out so we're not competing with all these hype YouTubers going into GameStop and AMC and Palantir. All right, anyways, back to the list. Next up is Alphabet, or Google. And no surprise here, this is one of the strongest companies in the world. They dominate search, they dominate video through YouTube, and they rake in billions from ad revenue. But here's the kicker, Alphabet is sitting on over $100 billion in cash. So this is more than enough to buy back stock, to fund AI innovation, or ride out an extended downturn. Anyways, in a crash, tech usually gets hit hard, valuation compresses, and fear spreads faster than logic. But when great companies get mispriced, that's when you act. Alphabet gives you access to not just advertising, but cloud computing, autonomous driving through Waymo, and some of the best AI infrastructure on the planet. So you're not just buying the dip on this one, you're kind of buying a tech powerhouse with cash reserves and real profitability. So when the dust settles, companies like this don't just survive, they come out stronger. Now the third stock I'd buy in a crash is AutoZone, ticker symbol AZO, and here's why. When the economy slows down, people don't buy new cars, they fix up their old ones, and that's where AutoZone shines. So they sell parts that, people need when budgets get tight, brake pads, alternators, oil filters. These are essentials, not luxuries. And they've built a pretty loyal customer base of both do-it-yourself car owners and professional mechanics. Now, what makes AutoZone special is how consistent they are. Some of you, if you are subscribed from way back when, like AutoZone was my go-to for consistency. Because even during recessions, they post solid earnings, they aggressively buy back shares, and they maintain healthy margins. Plus, they don't rely heavily on debt, which gives them room to maneuver when credit tightens, and yields just recently spiked up, so that's a big one. It's also a stock that thrives in the exact kind of uncertainty that causes most companies to fold. So let's recap. T. Rowe gives you financial strength and is a dividend aristocrat that rebounds with the market. Google gives you unmatched scale, cash reserves, and a long-term tech exposure at a discount, which, by the way, out of all the Mag 7 stocks, Google is probably the most fairly valued. And AutoZone gives you consistent demand and pricing power, even when everything else is falling apart. Now, during a market crash, these won't just be cheap stocks. They're actually strong businesses that happen to go on sale when the market freaks out. So the next time you see a crash coming, don't freeze, have a list, have a plan, and maybe have these 3 on your radar. Thanks for watching. Drop a comment with your top crash stock pick, and I'll see you in the next one.